Good morning, good afternoon, good evening, investors. I'm Taylor Watch from What's Investing, and today we're doing our December update challenge. How much dividends we received in December, who won the guessing, moving on to January, guessing for January dividends, giving a portfolio overview, and looking at all our graphs and visual incentives to keep us investing and keep us interested. So to get started, we'll look at our change in subscribers. In the past, we're at 278 and now we're at 280. So we're going to put $2 into Triple M. This is our dividend growth stock that we decided to start this challenge on and do that for the foreseeable future. And yeah, so for every subscriber I get, I'll be putting $1 into Triple M. And generally this has been going on for quite some time, and every month we'll be doing purchases, and every time there's a dividend, and just whenever I do the videos, when I do the buys, and we're just looking to grow and grow and grow with the company, and that's essentially what we're doing. And we'll get straight into how many dividends we received in December. And essentially my guess was, I think, 74.58 or something. It was whatever made up that to be 222, so it would be 74.78. And that would make $222 for 2021, and that was our goal. Of course, you saw the number there before as I had to re-record, but it was $67.48 for the month of December. So all of these juicy dividends got all the way up there to $67.47, and that is what we are aiming to achieve monthly at some point in the future. To get $70 a month from dividends would be amazing, and it's not too far away, probably a few years. But yeah, December being that big chunky month up there is bringing up these averages and really just showing what the portfolio can do with a bit of time, bit of compounding. Yes, the average dividends received per month is now sitting at around $10, and our trailing 6-month average is sitting around, kind of bouncing around 15 to 20. And yeah, our total dividends received over the 2.5 years or whatever is about $360. So that is pretty awesome, and we'll put that number right there, and you'll see that we are so close to that $222 of dividends for 2021. Just didn't make it, but that's alright. Goals are not always made to be achieved, they're made to be aimed for and see how close you can get. Basically, you know, the good old shoot for the stars, get to the moon kind of thing. Don't actually know the proper quote, but something like that. But yeah, now we've got the full 3 years of data here, pretty much, and just seeing these little staircases for each month and seeing how they're always getting bigger, apart from the odd dividend that gets pushed to a month it shouldn't be in. And yeah, 2022, I'm probably going to make it green or something cool because it's going to be a great year. And like January, February, and all these small months are just going to look so much bigger because of these monthly investment companies we've got going on, and all the different American companies we've got paying quarterly on different parts of the quarter. And yeah, just a lot different from when we first started having all these semi-annual New Zealand companies, and we've kind of just gone full circle and gone from New Zealand to mainly US investments. And yeah, the portfolio yield is sitting around the same it was in 2020 at 1.4%. But in reality, this number has actually grown in real terms, I guess, because money invested has under doubled, but our portfolio value has over doubled. And lots of this is due to our investment in Tesla, which was only maybe 2.5 shares, and now it is all the way up to 5.7, and Tesla pays no dividend. So we've invested a lot more into Tesla recently, whereas the dividend yield relative to the kind of money invested has stayed the same, but we've invested less into dividend companies, if you get what I'm saying. So really, if you ignore Tesla, this dividend yield has grown more than that differential. So it is really sitting, I think I did calculation on a website, it's sitting at like 2.3% or more, if we minus some of the non-dividend payers and stuff. So like that part of our portfolio is doing really well, and that's just awesome to see. But yeah, we'll have a look at who won the guessing game for December of 2021. So 6747 is the correct number. We've got a guess of 81, got a guess of 75, a guess of 1763, a guess of 70, and my guess of 7478. And obviously we can clearly see that Patricia has won the guess of $70 being the closest, and as my girlfriend, she has quite the insight into what I'm doing. She gets some of the behind the scenes information and some hints, and just has a pretty good gauge of what's happening. She's won a few months now, probably about 6 out of the 20 or so we've done. So she's got a good track record. She's probably got closer than me most of the time, because often Project Frugal or one of these investing guys generally gets in just under or just above my guess, and obviously just closes that gap. Yeah, so now I'll just go through the portfolios and how they've been doing and what's been changing. So our Hatch investment into Tesla back in 2020, we haven't touched since then, and we've just been kind of watching it, just watching the share price, and if it goes to a super insane valuation, like triple what we value it at its current point or whatever, we will sell. And generally, if it gets to the point where it's stupidly overvalued, it won't stay there for long, and you can just buy it again when it's lower. Something risky, but it's not. This is under a third of our stake in Tesla. Well, it's about a third in our stake in Tesla, just over. So it's something to play around with if the valuation does get insanely stupid from my perspective. Currently it is there with most other people's perspective, but I simply disagree. And yeah, so our Sharesies portfolio is looking pretty sweet. It's been pretty flat recently with investing. Like, this grey line has barely moved, but the pink one's moved quite a bit. We haven't done much investing since November, as finished my degree, had a 21st, had graduation, moved out of home, had to pay a bond, start paying rent, which I haven't been doing in the past. And so a lot's changed, working full-time now, never done that before. So yeah, moved in with Patricia. There's just lots of things changing. Everything is happening pretty quickly. So available cash to invest that I will obviously not be taking out just hasn't been there, and it'll start to come there pretty soon. I've set a recent top-up goal for the year. This might change. It was just an off the cusp about 5 minutes ago. So Sharesies introduced this new top-up goal feature, so you can just set up a wee goal for each week, and I've set it to be roughly 75 a week for the year. And I might bump it up higher. It depends on my disposable income after taxes, student loan payback, KiwiSaver, and just general bills and everything. If I've got enough left over to still have some general entertainment, snacks, clothing, dental, health, and all the random stuff you need, can maybe bump it up. But I think 75 is reasonable for now. But yeah, I'll be doing a goals video within the next week, talking about my dividend goals, how much I want to invest, what I want to invest into, what kind of return I want to see maybe, and just some general life goals as well. So stay tuned for that. If you're not subscribed and you want to hear about my journey moving forward, and maybe and looking at the comparison on my goals in the past, yeah, just stick around and subscribe, and there'll probably be a video in the next week or two. But yeah, we'll do the scroll through the portfolio now. We haven't really touched anything in the past, like 1 or 2 videos, so it'll look pretty much the same. Just some returns on some stocks will be a bit different, like Colgate recently spiked up quite a bit since when we were last looking at it. And I think, yeah, iShares hasn't really moved too much. Like, it's been pretty flat. Like 470 is roughly where it's been at recently. And yeah, MasterCard has been improving since its big drop here. I've been buying kind of when it's been dipping as much as I can. Missed out on this opportunity here, which is okay because you can't get everything, and it might be irrelevant in the future. Yeah, McDonald's I haven't really looked at too much. I must have bought a few dollars here, but I think the main portion of buying was back here, back at 220, so it's good to see that capital growing. Yeah, another one which has changed quite a bit since we last looked at it is Procter & Gamble. We last bought in August back at 145, and now it's all the way up at 160, so that's super cool to see. It's a great dividend payer. And yeah, the only obvious other one that's been changing heaps is Tesla, as it's been going all over the show. Got a nice buy in here, kind of a nice buy in here in retrospect to the spike. Yeah, we've been pretty consistently buying Tesla between kind of January 2021 to now. And yeah, just trying to really get as much as we can in there. Other than that, Visa's kind of recovered just back from its dip, which I was buying into as well. And Westpac's just been bouncing around. It had a recent big dip due to OCR rates in New Zealand changing and just some general mortgage stuff and I think a little bit of legal stuff. And yeah, so I started just like dollar cost averaging into this dip, then ran out here and then bought another one here. I think that's when we got the dividend. This is just a play based on kind of intuitiveness. I had money sitting around in a Westpac bank account earning, I don't know, like pretty much 0% interest, whereas the dividend at the time of my first purchase back in like COVID was, I think the dividend was like 10% or something, 10% or over or something. So I just bought in, and now we're receiving these huge dividends with not as much invested as other companies for the same kind of for a different return, a better one. And it seems super safe because like generally company goes bankrupt, that's where my money would be held anyway, just in general savings. And that's how I've been looking at it really. But other than that, we haven't really been putting money anywhere. We've invested maybe $150 over the past 2.5 months. So we've had pretty quiet period really. But just reeling in the dividends and doing nothing has actually just been really nice to see. Like over the month, we've kind of invested twice the dividends we've received. So through like October, November, December, we've received like $90 in dividends and invested $150 to $200 over that period. So we've kind of put in 66% of our own money essentially, because the other 33% has been dividends. So it's kind of just been nice to just go, I haven't really put in any money in December, but really $70 has been returned to me and I've bought shares with that. So it's been nice to just have a quiet period and just to get away from things. Similar to what I did in 2020 when I was on the road trip, just went really quiet. But just been enjoying the break really and just trying to settle into all the changes. But I guess we'll have a guess for January now. So 2022 January, I always struggle to just guess on some of these months because some of them are really small and they're just suddenly big based on like the New Zealand semi-annual ones, and I always forget when they pay. But I think a good gauge on January is to go small but go big small. So I'm gonna go with $7, and that's just going to be flat 7 for the month of January. So it'll be a lot higher than January in the past. So there was like a 25 cents and then $2.30. February, it was looking pretty small too, but I think $7 is maybe reasonable. I've already received a little bit in January so far, so I'm kind of gauging off that a wee bit, and I think there's a few other things to pay as well. I think maybe Pepsi and Realty Income Corp haven't paid yet. And then I don't know what other American companies pay. And I think I've had one of the other monthly ones. Don't know if another one is yet to pay. But that's what I'll go. So if you guys want to try and beat me as usual in the comments, just leave your guess for January, how much in dividends I'll receive. And if you win, I'll give your YouTube channel a shout out if you've got one. Or if you don't have a YouTube channel, just let me know if you've got like a Spotify account or an Instagram portfolio or a website that you want me to shout out, and if you win, I'll ask for more details on that to shout it out in the next video relative to the challenge. But yeah, we'll have a look at the weightings as I've finally properly updated it and given it a date relevant, because I think the last time was October, but I updated it more recently but didn't change the date, so I didn't really have a gauge. But we can see here Tesla is just the heaviest thing here. But this is based on market value, not how much I've invested. So I'm going to actually update the spreadsheet to have two versions, one based on money invested and one based on value to see the differential and to just, I guess, have some more interesting visual information going on. But yeah, Tesla and Apple being the top two, which is what we wanted from our goals. Tesla being 40%, which is where it's at. And I think Apple was trying to be 15%, but it hasn't quite got there as we've been spreading the money too thin along the other things. And we want a Triple M to be in third place, but we might have to hit that maybe this year, maybe next year. I might change the challenge a bit and make it so, because it's based on subscribers, right? And to get subscribers, I need to make some interesting content, have an interesting personality and whatnot. So I was like, maybe I can introduce something where it's like every video I upload, I also top up Triple M with $25 or something, to make it more incentivized if I want to grow my position in Triple M. So not only subscribers, it's also I need to make a video, which in turn will possibly get subscribers. So it's kind of like a positive feedback loop I want to create. I think that's the term. But yeah, something sitting in here, like Microsoft is a lot higher in the market value thing than I would expect, because it's kind of been pretty quiet. I haven't put too much money into it, but it's been returning really well. And it's just been one of those things that is passively dollar cost averaging up there without me actually just noticing, and it's sitting there great. Another one like that would be like McDonald's, kind of just quietly sneaking up there, even though, yeah, we haven't really been putting too much focus onto it. And then we've got these bottom four, kind of the energy, infrastructure, and telecommunication businesses of New Zealand. We're kind of just sitting there, capitalizing off their high dividend yields until we find somewhere we want to sell off those positions and put the money into. I think if SpaceX does an IPO within the next year or two, we will be selling out of those four and putting it into there, because SpaceX, not SpaceX, but Starlink kind of covers Chorus and Trustpower's internet provider service kind of thing. It won't exactly take a big portion out of their share, as they're probably faster and more city-based, but it'll take a little bit of a chunk. But it's a more interesting business. It'll be bigger in no time. It's actually probably already bigger than all of them combined, to be honest. It's just more interesting. It has Elon Musk as the head person, which is just always fun. It's American based. There's a lot more transparency in the information, the financials, and I don't know. It's just a super cool thing to have if you're like interested in off the grid kind of small home style creations. So I'm super excited about their IPO and just seeing where it can go in the future. So I'll definitely be selling out of these things, as I have not really any interest anymore. I started off with an interest, but now I'm just holding and taking in the dividend no matter what way the stock goes. I think I'm up on most of them, and the yield on cost on most of them is like 5 to 9% or something, which is just great. So there's no point selling until it's like really necessary for a better return. Other than that, we'll take a wee look at the dividend growth. So I've actually finally updated this pretty recently. So this isn't based on time. So none of these different companies are relevant to each other. Like this dividend wasn't paid at the same time as this one necessarily. Some of them might, but it's more just when this company paid a dividend. And it's just in order of when they paid, whether there's a gap or not, just to give an idea of where they're heading. And it's just really nice to see this on the big screen and to see all these companies and to understand what's actually happening. So for like Trustpower and Hallensteins, the most recent three are pretty close together, and that's because I haven't really put any money anywhere apart from the dividend itself. Whereas you can see Mainfreight has been, I've been putting money into Mainfreight and the dividend's been growing. Fisher and Paykel have been putting money in, and then I think this is an interim dividend, not a final one, so it has dipped a bit, but will be higher in the next one. NZX, Somerset, they're going up, whereas Sparks flattening out, so no buys. Chorus flattening out, no buys. Meridian is kind of flattening out, but this is interim final, and I guess the next one's going to be an interim dividend. So New Zealand is less consistent with the dividends. It kind of has a small one and a big one. Same with Contact Energy, I think. But now we get to the American ones, and it's very consistently growing based on dividend raises, share buybacks, so I hold a bigger portion, and just general investing more money into them. So we can just see that through all of these just growing. And I always love looking at the monthly ones. They're just beautiful to see them going up. And then Westpac has just been a huge payer. It's one of the biggest. I think it's, second biggest one based on dividends. And it's, I think, third on the Weightings. Oh, no, that's Hallenstein. So it's down here. So it's big for how much is put into it. Because Apple's got way more, but the dividend's smaller, and that's just based on yield and stuff. But it's super cool to just see how big something can get. And like AT&T being a very high yield, super sick. It's going to change in probably, I think, 6 months. They're doing a deal where they're splitting off their streaming service into like Warner Bros. Discovery or something. So they will lose like 45% of their dividend just based on cash flow changes, but I'm going to hold it and see what happens. And either way, I've had some nice dividends coming in. And this one is one of our new monthly payers. It recently paid in January a dividend, which I will not disclose for the guessing game, but it is a nice one. And that's going to start looking like these guys pretty soon. And that's been our dividends. I'll briefly go over the goals that we set. We wanted to invest to 13,000. We hit over 15. Good on us. We want to head to 6 shares of Tesla. We didn't quite get there. Some of that's based on just share price growth being a little bit more than we expected, because I think the year started out, I don't actually know, what was it, Tesla back, why did that not go? There we go. So what? Start of 2021, Tesla was actually a lot higher than I thought, but it did drop down to the 580s, which is now obviously 90% more expensive, so it's almost doubled. It did double at some points. But yeah, I don't know. I thought after this quick spike here that it was going to drop, which it did. So that's why I set the goal where it did, but I didn't expect this big growth here to happen so quickly as well. Kind of expected it to just trail along and maybe get there about this point in time, which would be like almost 2023. But lack of excuses and whatnot, we got close. Pretty happy with where we're at. Obviously would love to have more. If I didn't invest money into all these other companies, I would have easily hit it, but I guess I was playing it a little safe in ways. But yeah, Apple hit the goal easily back in November, I think. And then we stopped investing into Apple. Don't really know why we did that. I think I just had brain blockage of, we've hit the goal, don't need to invest in it anymore. So that was a little silly. So I'm going to start putting more money into Apple again. And then Triple M again, it's just based on my effort into the channel and the content I bring out. So in my next video, which will be about goals, I might update the challenge to be I add $25 per video from that point onwards, or from 2022 onwards. So if I do decide to do that, this video counts as $25 into Triple M. And yeah, we'll really try base the money we put into Triple M based off how many videos we want to make for the year, as well as how many subscribers we want to bring into the Watts family, I guess. So that's our portfolio update. That's the dividends for December. That is my guess for January. Leave your guess below. Leave any feedback on how you thought this year went for me, how it went for you, how your goals were achieved, and pretty much anything you want to say below. Even if you want to insult me, have a go. But yeah, I'll see you guys in the next video. Happy investing. Cheers.